Hi, Alan. So we heard some results today from Pandora, the branded jewelry company, the Danish branded jewelry company, and their shares were up almost 15%, I think actually over 15% this morning. So what's happened?
Good results. Per usual, they've had a string of good results recently. They're expanding their line. They've changed. It's the company that's been best known for charm bracelets, and that's done very well for them. But they've been moving into rings. Women apparently are wearing more rings when they wear rings, and those are selling well for them. So well that it's becoming a bigger proportion of the company's sales. So what was 6% at the end of in the last quarter of 2013, it is now 10% of sales for rings. So even though the company would prefer we didn't just look at it that way, it's more about profitability. But this is a business that's growing very quickly within the company, but has the same gross margins, and their gross margins are over 70%.
Oh, wow. So where do they go from here?
Good question. They continue to expand into places like China, where they haven't had such a big impact yet. I think Japan is maybe a little bit of a problem. But I think continuing to grow the rings business, as the analysts look at that 10% and compare it to the 16 or 20% in main markets like the UK and Australia for rings, and they see some potential here for growth. So there's plenty to do. Even Russia did pretty well. It's slowing down. Clearly, they have problems, in terms of the economy, and consumer confidence is slowing down. But even so, they managed 34% year-on-year increase in krona terms. So it's very good.
Okay, it sounds like good news sort of all around. I mean, are there any causes for concern or any risks that you can see?
Maybe Germany needs to be fixed. They're aware of that. It's a little sluggish. It's a much bigger country than, say, the UK, and yet sales growth there has been a bit sluggish, flat to up 2% or so. So that could get better. They are trying to fix that. They're trying to get some better properties and better sites for their stores, upgrade there. Their concept stores are rolling out, but it needs more work in places like Japan, where they've struggled. So I think it's pretty easy to fix some of those things. But what's changing, though, is Alan Layton, who has done a very good job. He's come down from the board, taken over as chief executive a few years ago when there were problems. Clearly his problems have been solved, I think, for now. And now the succession will be interesting to watch. He's going to step back and be in less of an executive role, a non-executive role, I should say, as deputy chairman. So it's something to keep an eye on over the future.
Okay, excellent. Thanks very much.
Sure.